Hi friends, welcome back to a brand new video. In today's video, I'll be sharing with you why I think tech stocks are falling, why tech stocks are crashing this past week, and what I'm going to do about it in order to maintain my profitability in 2021. So a lot of people are saying that we could
be right in the middle of a market bubble and this market bubble will burst.
A lot of people are saying that
Tech stocks like Amazon, Facebook and Tesla are way overvalued simply because they're trading at exorbitant or crazy high price to earning ratios.
while that has some of its merits, I don't really entirely agree with the view that tech stocks are way overvalued. If you look at companies like Amazon and Microsoft in the early 2000s and late 1990s, they were trading at crazy high price to earning ratios. But that being said, because people gave these companies a chance, this company took all these capital and essentially optimized their businesses, optimized their finances, optimized their financials, and because of that, the price eventually caught up to the price to earning ratios. And I believe companies like Amazon right now, specifically Amazon, is trading at a slight discount and they're still crazily growing at 20-30% per year. With that said, however, please note that everything shared in this video shouldn't be counted as financial or investment advice of any kind. Please do your own due diligence. So why are tech stocks crashing, or why are tech stocks falling today? In my personal opinion, it's because of rising treasury yield. When treasury yield is higher, we have to be more strict with the discounting of future cash flows. For people who don't know what this is all about, when we calculate the value of a company stock, we do so by discounting future cash flows or future earnings by the companies to today's present value, and treasury yields affect how we essentially discount a company's stock. So increasing treasury yield will essentially force us to be stricter with our discounting rate, and because when we discount more strictly, we believe the actual value of a company to be estimated slightly lesser. So because of that, people are more bearish towards the prospects of a company's stock, and more people are selling, and because of this mass sale, the prices are falling down. More people are selling than they are buying, and because of that, prices are down. So what am I doing about tech stocks falling or crashing this week? Essentially, I'm buying in the dip. Warren Buffett has this famous saying, be fearful when others are greedy and be greedy when others are fearful. So right now, a lot of people are seeing red in the market and just selling and selling and selling. For me, some of these stocks are stocks that I've put in my watch list that were trading at way too high prices and was just waiting for the prices to go down. And because the prices have gone down, I decided to dollar cost average, which is buying into the dip at different stages instead of just all at once. I don't know exactly where the bottom is, and if I buy all at once, tomorrow it might fall even lower. So to summarize this video, treasury yields, I believe, is the reason why tech stocks are falling this past week. It affects the way we discount company stocks and the value of a company, and because of this opportunity that presents itself, I've decided to buy into stocks that were previously in my watch list that I believe have good future growth earnings that will allow me to essentially get closer towards my financial goals. If you find this video useful, remember to like and subscribe, and I'll catch you on the next one.